Happy New Year, everybody. It is now 2023, about 12 hours before the stock market opens for the very first time in the United States. So let's talk about stocks and themes that we need to be aware of, a little bit about the past, and a lot about the future. I want to start with something that we talk about all the time, which is the major themes. Our four-step process begins with identifying secular trends. Here are some of the biggest secular trends. According to Ernst & Young, decarbonization, digitization, and decentralization. This article is from 3 years ago, something that we've been talking about since about that time, maybe a little bit beforehand. And it's important to understand that whether technology stocks are going up or down at the moment, technology, as it always has forever, is changing the world. You go way back to the pyramids, the aqueducts, some of the war technology that we've had, the railroads, cars. Remember those things? The horse and buggy almost knocked them off. Computers, transcontinental telecommunications, giant cables that go across the ocean so that we can make phone calls. And now we can make phone calls that bounce off of satellites in some cases, and more of that is coming. So technology drives everything. It always has, it always will. These are major themes here that are getting trillions and trillions of dollars of attention. And if we do nothing else, we try to follow the big money before the FOMO rallies occur. Because generally the big money buys ahead of time and cheap. The energy transition, according to S&P Global, is really the change from relying on fossil fuels to moving to a more carbon neutral energy mix. And that's important to understand, because there are ways to continue using some fossil fuels and still be carbon neutral or even carbon negative if you take a look at other sources of carbon release into the atmosphere that you can eliminate and use as fuel. The space economy is getting all types of attention and has for a while. I've talked about CES, the Consumer Electronics Show that I went to in 2020, that I thought may have been the most important thing that I've ever done in my career. And I was told by some of the executives, C-level executives and engineers and other people that were there, that it was probably the most transformational CES they had ever been to. At that event, all sorts of EV concept cars are there, including the Ford Mustang. Drones that were there that kind of blew my mind, because there was one from Hyundai that was as big as a room. It was a big drone. It really, to me, it's just a helicopter that's in a different shape. 4 propellers, it can carry a load. So it's really a super heavy duty helicopter in small form that we can use for other things like air taxis. We know that there's companies trying to do that. Again, technology driving things. Some of the other things at that conference was a lot of talk about crypto. And we know that most crypto is going to zero, but there is a use for the blockchain when it's properly used. So that probably means intermediaries are coming. Artificial intelligence has done some neat things, including breaking down all the proteins in the body into their composite shapes and what they're for. This is something that scientists have worked on for a very, very long time, for decades and decades. They put the question to an AI, and it took the AI, I believe, under a week to map every protein in the body. And what they do, they got like 97% of them right. There's like 3% that are still trying to work on. Something weird about those. What is all of this? What is all of this technology that we're seeing that's changing the world? It's called the Fourth Industrial Revolution. And it's largely driven by artificial intelligence, robots, and IoT, genetic engineering, quantum computing, which we talked about way back in February of 2020. And I said that it's probably not 2 years away, it's probably 10, but it's coming. They're making the initial forays into it. Why is that important? Imagine computing at 1,000 times faster than we do it today. It's already fast. Imagine what the artificial intelligence can do when it's 1,000 times faster. So the Fourth Industrial Revolution encompasses a lot of things, and it touches almost everything. The winners and losers out there will be inclusive of the technology providers, but also the companies that use technology well. It's already transforming, in combination with COVID, how we work. There's a lot more remote. There's a lot more hybrid. It's had a dramatic impact on real estate. And with interest rates higher, and about 1/5 of all real estate refinancing every year, because most commercial loans are on 5-year intervals, right? 5-year terms. So they have to refinance. In 2023, 17% of all commercial loans will have to get refinanced. People say, well, it's only a fifth. Yeah, but what if interest rates stay higher for a few years? What if Kirk, who's been telling you about the strong dollar future for over a decade now, is right, and the new normal is actually a lot like the 1990s and 1980s? What if interest rates don't go back down to zero anytime soon? What if mortgages that have an interest rate above 3.5% is real again? What if mortgages typically have 7, 8, 9, 10% mortgage rates again? What if that's more or less permanent? What if the range isn't from 3 to 5, but from 5 to 10? That's certainly well below what they were in the early 1980s and late 1970s, when mortgage rates were in the teens, and people who bought long-term treasuries in the 1980s got 30 years of high dividends and capital gains whenever they felt like selling, because interest rates chronically came down. Now, I don't believe that interest rates can get into the teens again for a couple of reasons. One, we just have a much more dynamic capital structure to the planet. We've eliminated a lot of the codependencies, a lot of the counterparty risks that we had in 2006, 7, 8, leading up to the financial crisis and the Great Recession. But there are still problems out there. And we have a sort of, I don't want to call it war, because I think that overstates it, but we have a sort of currency competition going on right now that weirdly, the United States does everything it can not to win. What am I saying there? What I'm saying is that the dollar, by all rights, should be the strongest currency on the planet without any sort of competition. We have the best economy. We have the safest geography. We have labor, even though we're short on it right now because we're fighting immigration that we should allow, probably. When the Fed chairman says we need more people, maybe listen. There's a lot of people on the planet that would like to be here. Let's invite some of them in. Let's not see how many babies Elon Musk can have. It takes him a while to get into the workforce anyway. How old do you think a Musk kid is when he first works? When he gets his first job? 12 to 18 months, right? Not quite out of diapers. I'm not really sure. I'm just kidding around there. But the reality of what's coming, our destiny, is demographics and robots. And I say that, and I'm dropping lines here, I'm dropping hints here about some of the upcoming articles. Demographics and robots are destiny. You can say it either way. Demographics and destiny is an old phrase. And when you think about what the population is going to look like over the next 10, 20, 30 years, some things become apparent to you. I had one of these discussions on New Year's Eve with a bunch of the kids of some of the parents that were at the party I was at. Every year we have a party about a mile away. Family has it at their house. Their kids are now 16, 17, and 18, and I think one of them is 19, might even have a 20-year-old. And they bring some of their friends so they can have their own supervised New Year's Eve party in the basement while the adults are upstairs, keeping track of who's coming and going. One of the kids asked me, because apparently there's a list of Kirk's life lessons for the kids that's apparently 50 or 60 long at this point, things that I say to the kids. And one of the moms took it upon herself to write them down over the last 4 years. She's struggling with her choice of a major in college, and she is an interior design major. Basically architecture on the interior, not the structural engineering part. How to make buildings work better. She was doubting it. And I said, I don't think that you should doubt that. If you like it, you should do it because there's a huge need for it. And I explained why. And the why is that the way that half of the white collar workforce is working now has changed, and it's not going back. And when you mix that in with the higher interest rates, that means there's a lot of real estate in play over the next 5 years that needs to be redesigned, because a lot of those loans can't be repaid now that only about half of office space in America is filled. That's true. About 65% of office space is filled in Austin, and that's the #1 city. So look that one up. You have cities like New York, Manhattan, San Francisco that are down around 50-something% occupancy. How do you pay back your note at a higher interest rate when your revenue is 30-40% lower? You have to do a lot of remodeling, right? There's a lot of office buildings that are going to have to be remodeled, which is going to take a lot of money at higher interest rates, which means that property is not worth as much. That has a knock-on effect in the investment world. We have a lot of REIT investors, and they just swear by real estate. Why? Because as interest rates came down, the population was still going up, they made a lot of money. And they could look back on a chart at the money they didn't make and say, it's going to keep going that way. I'll tell you, now that I've been working with some private equity firms and some hedge funds that I've had longer term relationships with, and I take a look at the way the real estate markets are shaking out, I'm like, big transitions there. People who thought they're going to make money aren't going to make money. Go back to this teenager. And I say, all these things in real estate are going to come to pass. And it's going to give you a lot of job security as office space has to become residential, as people no longer want 9-foot walls. They'd rather have 14. Why would they do that? She said. I said, first of all, it has to do with decarbonization, the way that you place the windows. I told her about some buildings that I saw in Seattle a few years back, and the fact that people are going to want really good ventilation in these buildings so that if they do go to the office, they don't feel like the germs from 12 feet away are getting to them. Remember those smoke suckers that used to be in the ceilings at the bars and restaurants? The coming ventilation systems are going to be like that. I have one in my house, but it uses light to zap the pathogens and clean the air. It's mainly for our allergies. In any case, people want to feel safe and they still want convenience. And what could be more convenient than living in a condo in the top half of an office building with your own elevator shafts and just going downstairs to work? What if you own your own business and you don't need a lot of space, but you could have, rather than a spare bedroom in your house or in your condo, be your office for a couple bucks, you could rent lower in the building or the building next door. The whole WeWork idea wasn't a bad idea. It was just financed poorly, and it really didn't adjust for the leverage or COVID. But small private offices with shared office amenities, it's going to be real. How do you make it work? Well, you make it work with more residential nearby. How do you design things? That's all coming. And it comes from the way the world is changing and the way that technology is driving all these things. So when I talk about the fourth industrial revolution and technology and decarbonization, artificial intelligence, robotics, IoT, AR and VR, it does in fact impact everything. And COVID appears that we are going to have long COVID as a society. It doesn't look like it's going to go away magically overnight. It's been a few years now. China's getting whacked right now. A lot's going to change again when all these things get built out, when the technology is faster and better, and we have to be aware of that. So continuing the conversation with this 18-year-old, I said, look, I think you're in a great space. I think that the 3 types of jobs in the future are going to be take care of young people, take care of old people, or have skills that are valuable and you can get paid for that aren't in those 2 other categories. So if you're a great chef, you'll get paid for that. If you can do the types of design work for all the changes in real estate coming, you'll get paid for that. If you're in medicine, you're going to get paid for that. But that kind of falls under the take care of the young and old in most cases. So all these things that we talked about in February of 2020, at the same time I was telling you to sell almost everything, right? There's a couple of articles out there, sell almost everything in February 2020. Because I spotted COVID back in January, posted it on my Twitter feed. The same thing is happening now. We have seen certain investments that don't deserve to get crushed in the past year. There are other investments that are holding up because who hasn't sold yet, right? You all know the answer. The old men haven't panicked and sold. There's a psychology among older men to protect the people around them. If they feel like they're making a mistake, they bail. It's not a great way to invest, but a lot of people look back rather than forward. When the future hits them in the face, they run away. I encourage you, if you're a decision maker on your family's finances, that you look forward 10 years, not back 10 years. Because the next 10 years are going to move even faster than the last 10 or the 10 before that or the 10 before that. We are hitting inflection points, in particular on communications and artificial intelligence and robots and how it's all connected by the Internet of Things, the IoT. A phrase that I didn't like at the beginning. Just for fun, I had a talk with 2 of the younger kids that were at the party. They were playing one of the games with us. So it's just a dice game where you pass quarters around the table and somebody wins at the end. And they have the last quarter, so they get all the quarters in the middle. And one of the kids asked me how old I was. I was like, how old do I look? Oh, you look my mom's age. I was like, how old is your mom? I think she's like 43. I was like, you're a good kid. And I said to him, how old do you think I'm going to live to be? He goes, I don't know. How long do people live? 12-year-old kid. And it was weird that was the answer because you'd already been showing us pictures of his first girlfriend at 12 years old. He said, I don't know, 80? He said, well, let me tell you something. If you live kind of clean, you don't wreck yourself by getting real fat, you don't drink and do drugs, you get some exercise, you don't accidentally kill yourself when you're young, because that's a thing. That's actually the leading cause of death is accidents and people being careless before the age of 25. You get to 25 without having killed yourself or getting really unlucky on a disease, you're probably going to make 70. He's like, really? Oh, yeah. It's almost a sure thing if you don't have bad luck. And if you get to 70 and you're still healthy at 70, right? If you're not on pills, you're still healthy at 70, you're going to make a run at 100. He's like, really? I said, yeah. My life expectancy is 80-ish, but that goes back to when I was born. At this point, I'm 52. He's like, really? Well, yeah, I'm 52. If I get back in shape like I'm planning to this year, I'm probably going to live to be 90-something. My 94-year-old grandmother just died. I have another 94-year-old grandmother that's still kicking. I have uncles in their 80s, so even the men are living that long. And these are people that are born in the 1920s and 30s, right? So what about people born in the 70s and 80s and 90s in this century? There's going to be a lot of people living to be over 100 and living pretty well until around 100 due to all the medicines, genetic engineering. What the AI can already do is kind of mind-blowing. Remember the TV show House? He was like the supercomputer doctor, right? He was the doctor that's always figured things out. Watson, which is from IBM, not even the best AI out there. About 3 years ago, it was right around CES 2020, just beforehand, was given a whole bunch of cases, medical cases, doctors couldn't figure out. The AI in a day came up with treatment plans for all of them. And it was like just under 90% of those treatment plans work, where the doctors couldn't figure out. Think about how individualized medicine is going to work once it's cheaper. I used to play poker with a doctor who was a cancer researcher, and he was Chinese, so he was only here for a while. And I said to him, Chi, was his name, Chi, do you think personalized medicine is ever going to get here? He goes, yeah, but it might take 20 or 30 or 40 years. And he joked, because he's a smart guy, kind of like fusion. I said, what do you mean? He goes, fusion is always 30 years away. And actually, that is finally only 30 years away with the recent developments there. But from the time they figure these things out, it'll take them 30 years to get it to market because they got to figure out how to use it and make it cheap enough. Well, in the last year, we figured out all the proteins in the body using AI. I'm certain AI was involved in having a fusion reaction that produced more energy than it took in, right? 50% more energy came out of a fusion reaction for the first time ever in decades of trying it than what they put in. 50% gain. So they put in a hunk of energy and they got a hunk and a half back. Eventually they'll make that cheap. And it's probably decades off, but now they know the theories are right and it's just a matter of executing the plan and then making it cheap. At some point this century, we're going to have really like almost free energy. So a lot of things are moving, some of them on shorter time frames, some of them on longer. But this industrial revolution, this fourth industrial revolution that they're calling it, it is transformational. And if you don't catch it, you're going to miss an opportunity, not only maybe of a lifetime, but maybe the last one ever. And I say that based on something I wrote in college and because I'm a Star Trek fan. I wrote in college, and it's another one of those papers I got a C on that looks like it was probably right. I said at some point, the technology gets so good, and the economies, if we don't kill each other in war, get so intermingled, and standards of living get to a point where we don't have to work 45, 50, and 60-hour weeks. We're going to get to a point where the economy is just a supportive thing of everybody's great standard of living. And we're generations away from that for sure. However, you can see what's evolving. Every statistical representation of quality of life has gotten better generation over generation, and it's been accelerating in the last 3 generations. Even with what's going on in the Ukraine, there's fewer people fighting wars than ever before. More people are making it through their first year of life. More people are making it to 25 years old. There's less malnutrition. More people are literate, educated. If we stop playing with our brains with divisive, algorithmic social media, imagine what a nice world it could be. I think all those things are coming. If you didn't watch Meet the Press this week, they talked about social media and how it's been weaponized, not only by the people using it, by the people running it. Some real zuckers. What you should come to believe is that the world is getting better And over the next 20 to 30 years, you can generate massive wealth. And I think you should focus on that because it might be the last gigantic bull market ever that is coming in the next decade or two. As the millennials get into their peak earning and spending years, which is happening right now, and we get out of this normalization period, we start to see who the winners and losers are. Some of these companies, some of these small companies I got you in, which are down 30, 40, 50, 60, 70% in some cases. Granted, that's from when we first discovered them. It's not what our cost basis is. At least it shouldn't be. You saw mine. I showed you what I paid for everything and how small my bites must have been to only have 2, 3, 4% of my money in them, to realize that if these stocks go from a couple $100 million in market cap to a couple billion, right? That's 10x right there. That's 10 times your money. But what if a few of them end up being $100 billion companies or $500 million companies, or in 20 years, $1 trillion companies? The technology platforms and one biotech platform clearly have that potential. The satellite companies have that potential. This article here talks about the space economy, and there's 100 of them out there. They all come up with the same answer. The space economy is going to be worth trillions in revenue. And at some point, I think they're projecting 2035, 2040, something like that, $1 trillion per year. The space economy is a big deal. The way that you can handle communications in every aspect of business using satellites and AI communications is pretty mind-boggling. You move a lot of what is terrestrial to space, and you regain that land for other purposes, but you end up with a cheaper way of doing what we've been doing in physical structures that's faster and more complete. And we do have a problem on this planet is we only know a certain amount of what's going on at any given time. The satellites networks that are going up and already partially working are going to solve most of those problems. Maxar Technologies got bought out by a private equity firm, which is always looking for vulture deals, and they paid double what the stock was trading for. A little bit more than that. Think about that. The established player, not even the one with the best technology, just the established legacy provider of satellite services, got bought out for more than double what the stock was trading for. What does that tell you when the leader was less than half price according to the private equity firm? It means that the ones that are up and comers are incredibly undervalued. So let's start talking about some of our stocks. So new format, not really new, just I keep improving this. Remember, getting a margin of safety comes from buying valuable assets. The market does not recognize that value. That is what that comes from. That's from Benjamin Graham, which is Warren Buffett's mentor. Seth Klarman, who wrote Margin of Safety, expanded on that. He had worked with Max Hine and Michael Price. Michael Price is somebody who I always looked to early in my career. And it's not about looking backwards. It's always about looking forwards. Not what this company is making today necessarily, unless you're just looking for a steady income play. What do you think they're going to make in 2 years, and 5 years, and 10 years based on their technology, their management, and their product mix? Are things going their way? And making precise estimates is impossible. I do everything based on market cap. So when you look at the very short list and I have a 5x potential, it's based on what their market cap is now to what I think it can get to if they execute their business. Obviously, not all of them will. So I'm not going to get down into all the stocks here, but I will reiterate, scale in slowly and at a wide price. So I will take a look at the S&P 500 growth stocks with you because I think there's an instructive lesson here. There aren't many S&P 500 growth stocks. Why is that? It's because most of the companies on the S&P 500, which is the largest 500 companies more or less, and they're not always the largest 500. Some of them had been, now they're not because they shrunk. But roughly 500 biggest companies, give or take. Berkshire Hathaway. Why do you own that? Why is that a staple investment for almost anybody? It's because it completely replaces the S&P 500, in my opinion. It's a better S&P 500 than the S&P 500. They own dozens of stocks and then dozens of operating businesses, something over a little over 100 total companies. Generates massive free cash flow, which they use to buy more investments when the price is right, or to do vulture investing and lending when things get bad. So you've got Berkshire Hathaway sitting on $150 billion or something at this point. And if the economy gets real bad, what are they going to do? They're going to buy a big hunk of Occidental Petroleum. They actually already did that. Or they're going to lend money to the banking system, right? They lend to the banking system. They helped bail out the banks in 2008. When their stock goes down, they buy back shares using some of that cash hoard. They put a floor under it. S&P 500 don't have that. So here you have arguably the greatest, but certainly one of the greatest investors of all time. He has a company set up with a great new class of management behind him because he's old, ready to continue the tradition of very conservative management, huge cash flow generation, and being the ultimate vulture investor because they have the biggest checkbook. And if their stock ever gets beat up, they just buy some shares back. They don't pay a dividend, so what? If you need cash, sell a share. Alphabet, still a dominant search company, getting some pressure, but as you can see from some of the recent deals, they're pushing more into entertainment. Then they have all the baby Googles that are going to come in the next decade. They're probably first or second in quantum computing at this point. The rumor, these rumors always turn out to be true, unfortunately, is that they created an AI that was so good at what it did that they couldn't tell if it was sentient or not because it appeared to have feelings. Now, I don't know if they lock that in some sort of box or if they kill it. I don't know what you do with that. There's not a law. If you go back to your Lewis Thomas readings, he talked about things like this happening way back in the 1970s. What happens, or if you're a Westworld fan, what happens when the robots are no longer servants and they're basically people? It's a tough question, right? Alphabet's technology is so good. Google's technology is so good that they're at the forefront of the fourth industrial revolution, even if their ad revenue isn't as good in the future as it has been in the past, because they're going to generate more subscription revenue through entertainment. And there's a huge washout going on in entertainment. We know that costs are coming down because they can't afford to pay the A-list celebrities what they've been paying them. So they just stopped. I'm sure there'll be a lawsuit. I think there actually already is one for collusion. We saw what Warner Brothers Discovery did, completely rebooting the DC universe, get rid of Gal Gadot and Henry Cavill. Not completely, just from the roles they're in, changing the nature of things. We can't pay you for these movies what we've been paying you, and we need to reset this thing anyway for a new generation. Love to have you in the future, but you ain't going to make as much. And that's fine, because really they were probably overpaid, just like most of the sports players. There's a reckoning coming there probably too. But where the reckoning isn't coming, all these people that want to say that tech was a bubble, they're wrong. It was overpriced because of COVID. It wasn't a bubble. The bubble is in the prices of things that haven't come down much, that don't have growth, but also have debt. So the combination of low or no growth with debt, that's the Armageddon zombie apocalypse that's still coming. It might not affect everything, but it will affect those. That will lead to what I've been calling the Great Divergence. Companies like Alphabet and Amazon and Nvidia, to a lesser extent Warner Brothers and Freeport-McMoRan, but definitely Generac, and I had to add Tesla back to our list. These companies that have growth rates in the double digits and have good balance sheets, I don't know that everybody knows this, but Berkshire Hathaway has a big pile of cash. But then the most cash in America is on the corporate balance sheets of the QQQ stocks right here. Massive piles of cash. And I still have to get to the S&P 500 dividend stocks, which Apple and Microsoft are sitting on mountains of cash. 70% of all the cash on American balance sheets are in the QQQ stocks. So when people try to tell you how good Simon Realty is or whatever, ask them, are they net debt free? Are they sitting on billions of dollars of spare change? The answer is no. And if you're in an industry that has to change and participate in a lot of CapEx just to keep things going, what is your future and what is the future for your shareholders? Versus if you're a rich company with great technology and you're leading the change, how are you going to do? How are your shareholders going to do? There's one correction you want to buy and one rally that you want to sell. You want to buy the correction in the fourth industrial revolution growth companies, and you want to sell as fast as you can before the second half of this bear market happens, the slow and no growth companies that have debt. I did a screen of the S&P 500, and the loosest screen, the one that gave me the fewest companies that are in danger, was 137 companies on the S&P 500. There's another 68 or 61, I forget exactly. Another 60-something companies, if I expanded the definitions a little bit of what I was looking for in danger companies. So somewhere between 137 and about 200 S&P 500 companies have problems with low or no growth and debt that requires refinancing. I'd much rather own QQQ than SPY, and I much rather own most of the stocks in QQQ than SPY. So one strategy that you can use if you want something simple, I'm going to say this because I just took a look at how many people have how many stocks because we did a poll. Owning QQQ and then a dozen or 20 stocks from the S&P 500 that aren't in QQQ and another dozen to 20 small caps, and a few other ETFs to get emerging markets exposure might be all you have to do. You could have QQQ, a couple other ETFs, and 20 stocks between S&P 500 stocks and small cap stocks. It'd be good. Done. Go work on your golf game. Go find that fishing spot. Build an Etsy account or Pinterest or something, whatever. So these are my favorite companies on the S&P 500 that I would call growth companies. Berkshire Hathaway, Alphabet, Amazon, NVIDIA, Warner Brothers, Discovery. I will tell you, I'm watching what they do very closely, and I don't think they've made any mistakes. They're going to have cut their debt by nearly $4 billion since the merger by this year sometime. And the new DCU is going to probably be as good as Marvel based on who these people are and what they've done in the past. And if they can cast well, they're going to be outstanding. And I would ask you to go watch Gotham, the TV show. If you really want to know what Warner Brothers Discovery can be with HBO and Discovery combined, remember they own CNN, so they have sports through TNT and TBS. They really are every bit the equivalent of Disney. You take a look at what they're trading at versus what their revenues could be in a couple of years, and what happens if they make some sort of strategic transaction by acquiring some plug-in parts. What if they end up with places for people to go to? What if they end up with a couple theme parks, a couple hotels? It could be interesting. I think Warner Brothers Discovery is going to shock people, because not only is it going to reach its old highs, I think it's going to blow it away. It's going to take 3, 4, 5 years of hit movies for it to happen. But if you want a low-cost bet on something that could be a rocket ship that's in the S&P 500, Warner Brothers Discovery is, I think, near the top of my list. It's only the behemoths that I have ahead of it. Freeport-McMoRan, there is a current copper glut developing that'll be very short-lived because 4 new mines came on around the world, big mines. But the demand for copper is huge because it's attached to all this fourth industrial revolution technology and some of the other metals that they mine. So if we get a recession bottom on Freeport-McMoRan, which we've talked about before, you'll want to buy Freeport-McMoRan. I've traded it 3 times in 25 years, and all 3 times I tripled my money or better. And there are some pretty nifty option trades you can make if you're an option trader. Generac, my hometown in Milwaukee. It's not in the clean energy ETFs. If it were, I don't know that I'd buy it for the same reasons that I list for a couple other companies. But they're not in the clean energy ETFs because they make generators, hence the name Generac. And they're the leader in that industry by far. Nobody's close. But what they've done, and the management did some really smart things 4 or 5 years ago, is they decided to compete with Enphase and SolarEdge. They're just getting it off the ground. But they're using their relationships with dealers all over the country, or all over the world really, to supply the energy management solutions and batteries and solar installations, because they have a partnership on that with the 3rd biggest solar installer, to be a big player in both. When these guys start offering more of the fuel cells, which they are, you're going to see some even neater things. So these guys are perfectly positioned. And if we can get a price in the 80s or 70s, I think we're real close right now. I think that's probably as bad as it gets. They came off a big mountain peak down into the valley. We waited to see where the knife was going to settle. I think we know now. I think this is one that you can start accumulating on the dips. So this is definitely a buy the dip stock. Tesla. Here's the thing that you have to realize, and I've been realizing it more the last couple of weeks because my Christmas present to Jolene was a car. And I gave her 3 little boxes. One was a book. A couple other ones were just some bracelets and stuff, just like costume jewelry and some other stuff. And, it was probably $100 worth of gifts. Then on the card, we get each other 2 cards every year. One of the cards, I said, by the way, your actual gift is in a parking lot somewhere. So we've been looking for cars for a couple weeks now. I guess it's only a week. Man, it seems like longer. We've been to 8 dealerships. Nobody has any inventory. It's really a good argument for Carvana. I don't want to spend the $2,000 extra dollars because Carvana is almost $2,000 extra dollars, but they're buying all the inventory straight from the auctions and the big dealers in the big cities. They don't have room to have a used car lot. Kazoo, interestingly, down to dimes, suddenly has piqued my interest again. If they really are in business in a year, they probably do very well. They have a bankruptcy risk. I don't think Carvana has a bankruptcy risk, but they might never spin off enough revenue in the short term and intermediate term to make it worth my while. But the fleet of cars out there is now older than it's ever been before, ever. Not even close, like 2 years older than it's ever been because there hasn't been a lot of cars that could be sold the last couple of years. Supply chain issues, part of the transition. The entire EV industry is going to make a ton of money starting in a couple of years. We keep targeting 2026 as kind of the inflection point on EVs. That's when the factories are all done. That's when the battery supply chains are set up. That's when the laws start to change quickly to push people into them. We'll talk about that in an article about what is not only a great basket of stocks to own, but how to go out and buy a new car with what's emerging, because that's a big financial decision. In any case, you guys know that I'm weirded out by Elon Musk. I don't know if he is an evil genius. I don't know if he's Dr. Evil. I don't know if he's thinking at such a high level that I just don't comprehend it. I don't know if he's an alien. I don't know if he's a megalomaniac. I think that one's pretty clear. A narcissist. I think that one's pretty clear too. But I tell you what, Tesla with a market cap closer to 200 billion than a trillion is suddenly pretty interesting. So we get into the 200 billions somewhere. My guess, based on my charts and based on industry trends and timing of debt maturities and everything else, tells me that somewhere between 200 and 300 billion in market cap, we got to buy this one because it's still loved by a lot of people. Man, and if he navigates it right, he can make a ton of money for that company, and the shareholders might win part of their lawsuit, which means that he has to give some shares back. He might just sell the company to better floor managers because he's not a great floor manager. That's the one thing he's not great at. Have you noticed he has a little bit of a hard time relating to people? So these are the S&P 500 growth stocks. I wanted to give you that taste so you understand how I think. I gave you the background up here so you understand how I think. There's 4 charts I have left to do on this. I'll have them done tomorrow morning, and I'll get this article out tomorrow morning. I just want to take a look at a couple of companies here that are on our list. These are dividend stocks that aren't on the S&P 500. And I think you're going to love my dividend stocks that are on the S&P 500. These are 4 of the ones that aren't. And they share a theme. New Fortress Energy. Do you remember what they do? They have a technology for turning natural gas at an ocean platform into liquefied natural gas and putting it straight onto transport ship. So if you think of companies like Cheniere, where they have to get the natural gas to the Gulf of Mexico coast and then convert it to LNG and then load it on a ship, pretty amazing what this other company, New Fortress Energy, can do. They cut out a ton of steps in getting LNG on the ship. With the demand that we're going to see in Europe for the next 2 to 4 years, unless little Vladdy meets his very fortunate demise sooner than later, the demand in Europe is going to drive all of these natural gas companies. Some of these natural gas companies could buy back all of their shares over the next 4 years. I don't think this is one of them, but this could be a net debt-free company in 3, 4, or 5 years. They pay a variable dividend. The CEO, Wes Edens, who looks like he's going to buy the other half of the Milwaukee Bucks from Mark Lazary, has a huge stake in this company. He's a billionaire that put most of his money into this, at least a lot of his money. I think that this stock can go up 400, 500% pretty easy from nearby prices. It is such a unique technology. Look it up, understand what they're doing, and understand that nobody else in the world is doing it. The demand for natural gas is going to be high for a while, and especially, think this through. If oil demand has indeed roughly peaked, and it's on a plateau, it's going to turn over starting around 2030. And something like 40% of natural gas is from associated production when there's oil production as well. What happens when there's less oil production and we still need the same amount of natural gas? Supply and demand imbalance. I don't know that natural gas is going to get cheap anytime soon. And it might have a few years of being really expensive left that are nearer than, sooner than later. Next several years. I think natural gas is a pretty good investment for the next 15, 20 years. I think natural gas is just hard to find a bearish argument. At some point, you get your FOMO rallies and you don't want to be in it anymore. I think that right now, this is the start of a breakout. It's tried to break out here, hasn't succeeded. It's going to break out by next winter. Permian Resources, you know the story on this one, or you should. If you're new here, you will. This company is the merger of Centennial and Colgate and a private equity firm that was buying up assets when record numbers of oil and gas companies were going bankrupt after Saudi Arabia flooded the market with oil in 2014 and 15. So these guys focused on Permian Assets. And I had made a joke in an article that somebody should start a company and call it Permian Resources and buy up all the stuff that's going bankrupt. That is exactly what these guys did. At some point, I'm going to talk to them and ask them if they owe me any money, right? If they somehow got my message and they went and did it, they could at least, throw me a stake in some small well that's running off or something. In any case, the stock has a breakout coming. Once it breaks 20, there's a long way to go up. They are allocating half of their free cash flow to dividends and share buybacks. I mean, this stock could pretty easily go to 100, and there's just not a lot of risk to it. The assets are dirt cheap. They're net debt free. How many oil companies are net debt free? Like 8? I mean, it was none. Now it's like 8. I think this stock breaks out. You should get into it quick. And then Blackstone and KKR are stocks to watch. Here's why. They are leaders in the clean energy transition. They've bought a whole bunch of assets cheap the way the Permian Resources did, but they're also involved in clean energy, and they buy distressed real estate, of which there will be a lot in the next couple of years. I don't know how low these go. I've basically set the bottom fishing price just above the pre-COVID price. Here's the thing. I don't know how bad this is going to get. And anybody who tells you that they know is lying to you. This knife could fall all the way down here into the 30s. So don't just say, oh, it's 59, I got to buy it. No, evaluate at that point, and I'll do it with you. But if this knife does get all the way down into the 30s, you buy Blackstone. If KKR gets under 30, probably in the 20s, I guess. This is probably the bottom right there, 20-ish. But if it gets into one more zone lower, just like Blackstone, both of these companies are doing the same thing. They buy distressed assets in energy and in real estate, and they kick out huge variable dividends. I have seen them pop out 12 and 15% dividends, special dividends in my career. They're going to keep doing it. If you get a recession crash price on these or Freeport-McMoRan, I just want to show you this chart before we go. That is some spectacular volatility. If you get one of these prices down here, if it gets back down here, you dive in. It's a pretty easy double or triple. All right. I will get this out tomorrow early. There's not much left to do. I have like 4 stocks. The VSL, if you've been watching it, has been getting updated with a lot of new dates. I'll make sure that all the plug and plays are done. I'm going to get Shooter's Elliott Wave charts as well at some point. He had surgery before Christmas. He's recovering now. He's in good shape. He should be working full time in the next week or 2, I would think. If not, at some point in January. We don't really need the Elliott Wave charts until we're right on top of stuff. And I want to really focus on great entries this year because we are running into a lot of pivot points. And pivot points are probably the fastest way to get rich. If you can catch absolute bottoms before a big rally, right? I caught this one and I bought calls and stock. So my calls, I made 10x on, and the stock, tripled. If we can catch some of these here this year, take a look at QQQ. We've been following this 240-ish down to 200-ish. Get a price in there on QQQ. Man, that's going to be pretty nifty. And just remember, if bad things happen around the world, we could get prices down here. So don't go asking me every other day what to buy. Pay attention to the process. Pay attention to what's really going on. I'm going to make macro dashes an every week thing this year, focusing on a couple of big ETFs and then the macro themes. And we will find a resting knife and pick it up off the ground. Now, we'll try 20 times, and we're not going to get them all. We're going to cut our hands a few times, like we did last year. Some of the small caps, the SPACs in particular, everything got thrown out. Everything. If you're a small cap company or you're a SPAC, you got destroyed. Almost, with the exception of some of the biotechs. Biotechs, which I suggested could go on a huge rally, did. We didn't get in enough. So on the biotech pullback, we'll probably want to get in because what's changing is pretty incredible. One of our companies is a platform company in biotech. And if you're not investing in the DNA of this company, then I just think you're making a massive mistake because they're going to have recurring revenue and royalties on top of recurring revenue and royalties. And they're just starting out, and they're already up to over 100 different streams of revenue from companies using their biotech platform. All right. And if you want to know what that company is, become a subscriber if you're not. Let's keep an eye on this. Does this hold? Or do we need Jay Powell to come to the rescue? We'll find out and we'll keep track. All right. Have a great new year. I do think that this turns around later in the year. And I think the small caps lead on the way out. Take care.